FUBO, okay? I haven't been buying any of these unprofitable stocks for quite a while now at this point in time, and I don't know, man. The itch got me, okay? The itch got me. I've been a good boy for a while now. I've only been buying profitable companies that super solid. I took a risk, okay? I did buy some FUBO shares in relation to this. Oh, by the way, this is another reason Ally kind of sucks. That you have to pay commission if you buy any stocks under $5 from what I saw. I was like, what $53 commission? What is this, the old days? When I signed up with Fidelity Investments, they used to have to charge, they charged me, what was it, $19.95 if I recall, every single time I bought or sold a stock. Didn't matter if it was like $19 worth of stock, you still got to pay the fee. It was absolutely incredible, right? But FUBO, I'll be honest, I haven't really been taking any substantial risk in any stocks. And, I just had to do it. I mean, at the end of the day, let's be honest, like stocks like Amazon, PayPal, those sorts of companies, Cheesecake Factory, those aren't going to 10x, 20x, 30x my money. FUBO, let's be honest, it has a real chance to, okay? They're not expected to have to basically issue any more debt. They're not expected to have to dilute shareholder value anymore. They're announcing some big news here recently. Spotify veteran Dan Sormaz joins FUBO to lead product design. They announced big partnerships with some baseball teams recently, big partnership with Ryan Reynolds going through right now. And so, there's a lot to be excited about with FUBO. It's a huge risk stock, obviously. Like, what if they don't make it through? What if they're lying about not having to raise capital anymore and they have to do it in the future or something like that? Those are always risk factors, and so it comes with a lot more risk than, let's say, an Amazon, a Cheesecake Factory, a PayPal. But the upside here is just like, it's crazy, man. It's absolutely crazy. And look at this, okay? Their revenue was basically non-existent in 2019. Last year, they did over $1 billion of revenue. Who's scaling their business that fast? I can't even think of another company in the world that scaled from basically no revenue to $1 billion plus in that fast for a brand new business. Like that's insane, okay? To put this to some more scale, this is a company that if you go back to the first quarter of 2020, they did $7 million of revenue, right? By the time we hit September 30th quarter, 2021, they were doing $157 million. And they've 2x that just in a very short amount of time between that September quarter of 2021 and the March quarter of 2023. They 2x'd what they're bringing in for revenue. Now they're doing, at this point in time, look at this. They're doing more in a quarter, and substantially more in a quarter than they were doing in all of 2020 for annual revenues. And probably by the time we hit at some point next year, they'll be doing more in a quarter for revenue next year at some point in time than they were doing in 2021 for the full year. That's how fast this business is scaling, okay? Now, obviously we're about to go into football season. Football season is, because right now it's July, right? So you have some college football start at the end of August. You have some preseason football start for the NFL in August, right? And then obviously the regular season, things go crazy for FUBO in terms of September, right? Everybody Google Trends it because at the end of the day, like if you're a football fan, the number one service you want to sign up for is FUBO, like over everything else, okay? YouTube TV is cool and YouTube TV is really the only competitive threat for FUBO. But at the end of the day, like especially if you're a college football fan or an NFL fan, like you get more bang for your buck through FUBO than any other service out there by a mile. You got more channels. You can put on 4 games at one time. Like it is the creme de la creme. And anybody that's a diehard football fan, like FUBO is the best service for that, right? So that's coming up here. At the end of the day, when it comes to FUBO, as long as they can make it through this time period of losing money, right? We need to see them bring up that EPS, get their margins in a better and better place quarter after quarter. They've already started to make tremendous progress on this. We need to obviously continue to see this progress over the next several quarters. If they do that, man, the big question for me with FUBO, as long as they make it through, is this going to be a $5 billion type company, market cap-wise, or are we talking a $10, $20, $30 billion company? That's the only thing that's in question for me in regards to FUBO, as long as they can make it through. So it comes with this risk. It's a money loser, but dang, man, it's a hard one for me not to just be very, very excited about for the long term when I see everything that they got going on here and being a sports fan and just understanding how valuable their service is. And just understanding they only have one major competitive threat, and their major competitive threat, YouTube TV, is like, of the things of importance for Google, like that's certainly not up there. That's like way down the list. They got Google search to worry about. They've got YouTube to worry about. They've got Android to worry about. So anyways, we'll see what happens with that one. That's the one risky one. focus on the long term in regards to three different ways, okay? One is companies. Focus on what a company's likely doing over the next several years. Forecasting for that company over the next several years. Focus on the long term. Taxes. You don't want to sell for short-term gains because you get absolutely demolished in regards to short-term gains, right? Like the goal should be, if you ever sell for a profit for a stock, make sure it's a long-term profit, okay? Because we do know if you're taxed on the short term, so let's say you hold a stock for less than a year, you sell it for, some sort of profit. Now you have to pay your regular income tax rate, which is usually much higher than capital gains tax rate. And so it counts as more like ordinary income than at that point in time, which is, obviously, once again, taxed at a much higher place. And in regards to portfolio and portfolio decisions, focus on the long term. Make decisions you're going to be proud of with your portfolio 3 years from now, 5 years from now, 7 years from now. Don't run your portfolio based upon, this is a problem that I see a lot of Wall Streeters get involved into and some retail investors, is they get caught up into this thinking, this thought process of like, everybody's positioned over in these oil and gas stocks right now, so this is where I need to position my portfolio. And, everybody's buying the growth stocks right now, so that's where I need to position my portfolio. Don't run your portfolio like that, okay? Focus on the long term of that portfolio. Make decisions you're going to still be happy with 4 years from now, not 4 days from now or 4 months from now, okay? Focus on the long term always. It's extremely important. Now, look at this here. It's very important. Piper Sandler senior research analyst Alexander Potter wrote in a note on June 26 that according to the firm's analysis, prices have been stable for Tesla during the second quarter on balance. The company's steep discounts in and beyond China in the first quarter sparked cries of a price war in the electric vehicle market. Potter cautioned that price cuts in Q3, if any, could reignite concerns about margins, for sure, right? But here we are in a moment when Tesla looks like, they're going to be able to keep prices stable. I mean, we'll see how the economy fares, but if the economy stays decent, there's also a potential here, folks, that Tesla could start going back up on some prices in the back half of this year, which would obviously increase margins, okay? And so this is just something important to kind of keep in mind here. And I can tell you, when you're posting numbers like 83% growth year over year in deliveries, Tesla doesn't really need to lower price anymore. It clearly looks like they've got more demand than they could ever know what to do with. When you report 83% growth on a year-over-year basis, dude, you're doing the insane numbers. And the next thing I think about what happens when Cybertruck hits. We know Cybertruck's going into production in the back half of this year to some sort of extent, right? We don't think it's going to be a mass production until 2024, but we know this is going to go into some sort of production. And the question is, with this baby ramping up in a major, major way in 2024, what type of supercharge are we talking about, no pun intended, for Tesla's numbers here, okay? I mean, because this is going to be absolutely insane. I think Cybertruck is still lost on a lot of people in regards to Wall Street, and they forget that this is the most talked about vehicle in the history of mankind. We've never seen a vehicle get this much buzz and excitement and talk about when this vehicle obviously was shown off, right? I mean, everybody and their grandma was talking about Cybertruck and, I don't know about that thing. What did Elon do? They busted the window. It looks crazy, this and that, right? And so it's going to be fascinating to see what that does for Tesla's numbers overall. And I can tell you, when you're already posting these sorts of numbers and you're going to add this fuel to the fire, what a time to be a shareholder of Tesla, okay?